All right. Well, thank you very much. So my name is Steve Cohn. I'm a U.S. Health Advisor, and what we do is we found, well, not me, but the company U.S. Health Advisors and U.S. Health Group has found a solution to the healthcare situation. It's actually a company that started back in 1947, so it's been around for a while, and they just kind of ebb and flow with whatever is going on with the healthcare market. Since Obamacare started in 2010, they've been able to find plans that were able to combat the frustration that people have felt since Obamacare actually came into force in 2014. Obamacare is otherwise known as the ACA, the Affordable Care Act, and every year it seems like it's less and less affordable. So what we're trying to do is find affordable solutions for our clients, for individuals, families, and for small businesses. All right. So I'm licensed in 30 states. I'm not going to read off of those, but you guys can take a look at that. Just in case you know anybody in any of those other states, I'm able to help you out with that as well. All right. So top 5 reasons why Americans go bankrupt. Basically, it's unpaid medical bills. Very simple. All right. You have a lot of people who are uninsured or underinsured. They don't have a plan that's strong enough to deal with major medical situations, and therefore they have hospital bills into the tens of thousands, sometimes hundreds of thousands of dollars, and they're unable to pay them, and therefore, unfortunately, go into bankruptcy. So that's why insurance exists. Okay, we have insurance just in case something happens. Same reason we have homeowners insurance, right? Same reason why I have auto insurance, etc. Okay. Now, there are different networks that most people have heard of PPO and HMO, but there are a few other different types of healthcare networks that are out there. So I'm going to go over them real quick. I know it's a little small for those who are on the webinar, but I suppose you can send this out afterwards. Is that correct? Excellent. Okay. So let's start with the HMO. That's probably the most well-known. It's called Health Maintenance Organization. And those are geographically restricted networks, usually just within your county, sometimes within your state. So if you're out of your county or out of your state, then you're going to be out of the network, which means out of pocket, right? So in addition with an HMO, you need to have a primary care provider, primary care physician, and in order to see a specialist, you have to get a referral from that primary care physician in order to go. So basically, you're seeing 2 doctors instead of 1. All right, you have to, if you have let's say you have a rash on your leg, you have to see a dermatologist, right? So you have to first go see a primary care physician, only for him to say, hey, look, you have a rash on your leg, you need to go see a dermatologist. And then you have to pay that $40 copay or whatever it is. And then you have to get an appointment with the dermatologist. That's 3, 4, 8 days later. By that time, what's happened to your rash, right? So it's very inconvenient sometimes to have an HMO, many times, and of course if you travel. A POS is a point of service. Some people call it something else, but I'm not going to go there right now. It's a very, very small network where you also need a referral. It's also only within your county, and you have to file your own claims. You have to send your own claims to the insurance company. Okay, where what we're used to is the doctor's office or the hospital filing it for us. Then you have an EPO, exclusive provider organization. So exclusive, a lot of times that means that it's something positive, right? Exclusive. Oh yeah, we're just a few of us and we're able to do something. Well, what it means is you have a facility probably about the size of this with 8 to 10 doctors, and that's it. That's your network. So if you're across the bay and something happens, if you can't get yourself back over here, you're out of the network. If you're out of the county, out of the state, you're out of the network. So that's PPO. That's EPO. Exclusive provider organization. It's the most restricted network. Okay, and then finally you have PPOs. PPO is a preferred provider organization. Preferred because you can see any doctor. You do not need a primary care physician. You do not need a referral in order to go see a specialist. You don't need to file your own claims. The facility will always file the claims for you. All right, and it's the largest network, and there are many PPO networks out there that are national PPOs. That's what we're going to go over as well. Okay, the great thing about the PPOs is that most all doctors are going to accept them. So you don't have to worry about being out of the network, even if you're across the country, even if you're in Alaska, Hawaii, wherever you have it. Okay, so let's talk a quick thing about Obamacare. Okay, so some good things happened with Obamacare. Theoretically, it was good for a certain class of people. You have universal health care. Okay? Prior to Obamacare, if you had a pre-existing condition, a very serious pre-existing condition, it was very difficult to get health insurance because most of those plans were underwritten, which means that based on your health history, or you have to go do a medical exam or what have you, and if you have, God forbid, heart disease or cancer and stuff like that, for many, many people, they were uninsurable. Okay, so this was a great relief to them, so they're able to actually have health insurance at least. Okay, and at the beginning, it was affordable. We'll discuss why. Well, here it is: the healthy people paying for the unhealthy. So basically, what they did is the idea of it was that everybody had to get an ACA plan, an Obamacare plan, the healthy people as well as the unhealthy. So what they figured is that the healthy people, with their premiums, okay, and they're not using it because they're healthy, right? Those premiums that their insurance companies are going to be receiving should have been enough to pay for the medical costs of those who are unhealthy, of those who really needed health insurance. Okay, that was the theory. Unfortunately, a lot of people did not sign up. A lot of Americans did not sign up. So they instilled what's called the ACA penalty, or the Obamacare tax. Some people call it the shared responsibility payment. And that was in order to kind of nudge everybody to make sure they have an ACA compliant plan. Well, that all went away, if we remember, in January of this year. Within the new tax bill, they took away the ACA penalty. Okay, so that's going. This is the last year of the ACA penalty, starting January 1st. You don't have to worry about that anymore. All right. Also, these Obamacare plans, they have been increasing not only the premiums, okay, which we're going to see here, but the deductibles. The deductibles, most of them started at about $3,500, and now in 2018, the bronze plans, the lowest cost plans, are at $7,350. So unless you have something catastrophic going on, it doesn't make any sense, right? You know, who here is going to incur $7,350 in medical costs if you're relatively healthy, right? Unless something catastrophic occurs. And then, so what happened was, since the healthy people were not hopping on the Obamacare train, like the government wanted everyone to do, the insurance companies did not receive enough income in order to pay for the medical claims. So big companies like United Healthcare and Humana, they all pulled out of the ACA because they lost so much money. All right, it was very big in the news that Humana lost $1 billion in 2015, just 2015 alone, $1 billion. So in order to try to recuperate that and try to stay into the ACA marketplace, they kept on jacking up their prices. Okay? Blue Cross Blue Shield, Florida Blue here in Florida, they're still in the Obamacare plans or marketplace, but they have to jack up their prices, 30, 35, 40% every single year in order to try to stay even and not lose money. So what happens to the consumer is when they're out, trying to get health insurance, it's extremely expensive now. Okay, so for my family, for example, I'm 53 years old, my wife is 53, and we have a 19-year-old son. Just the three of us, okay, we're relatively healthy. It would cost $1,140 right now. $1,140, and come January, that's going to go up to about $1,350 or $1,400. That's for three people.
That's per month.
But per month.
Really?
Per month. Crazy, right?
That's insane.
Okay. All right. And there are no PPO plans in Florida on the ACA. So you have to go onto an HMO or even worse, an EPO. All right. So if you're traveling and you live in Florida and you travel outside the state of Florida or outside of Hillsborough County, if this is where you live, or Pinellas, if that's where you live, because it's based on your residential zip code, you are out of network. Okay, so why U.S. Health Advisors? So our mission is to protect our customers from financial hardship due to unforeseen illness and injury. That's pretty common for all insurance companies, okay? Our real mission, seriously, is to help save you guys money, to be able to provide an excellent health plan that's going to cover the major medical type events, okay, including life-threatening cancer, heart disease, stroke, kidney failure, everything, okay, from head to toe, and where it's not going to cost you an arm and a leg, okay? Most of our plans are innovative, but they are for relatively healthy people, okay? There are underwriting guidelines, all right? So it's kind of like back to where it used to be before, when plans were less expensive, but they are underwritten, okay? So this is a fantastic solution for those who are relatively healthy. And the underwriting guidelines actually are quite flexible. Okay, so I do this all day long. I have a team of 30 agents under me, and so I help them out and all that. And so we see a lot a lot of situations that are accepted. So don't think you have to be perfectly healthy in order to be accepted. So you have low premiums, usually 40 to 50% less than the ACA plans. Okay, so that policy I was telling you about, myself, my wife, and my son, that would have been over $1,100 on the ACA, cost $672. That's how much I pay, $672. And I have a zero deductible, zero copay, and zero co-insurance. Okay, so the savings are tremendous. Usually $4,000 to $5,000 a year for a family, $2,000 to $3,000 a year for an individual. So the savings are absolutely tremendous. Now, in order to get on this plan, you just have to be relatively healthy. There's a list of medical questions that your advisor will go through. There's a 15-month rate guarantee with an average annual increase of only 4%. Okay? While these Obamacare plans, remember the numbers up here? 27 to 42%. Check it out in the news. You can Google it up. And it's a nationwide PPO network. Anybody heard of Cigna? Yeah. Cigna is actually the largest PPO network in the country. So you can see practically any doctor, any clinic, any hospital across the entire United States, wherever you happen to be traveling. Even if you're traveling internationally, because we just talked about that a little bit, all you have to do is, of course, there's no Cigna outside the United States, but you pay up front your medical bills, you bring it back, you send the claims, you send the invoice into the claims department, and they're going to send you the benefit amount via a check. Okay, so which type is right for me? You can get the U.S. Health Group. It's U.S. Health Advisors is the sales arm for U.S. Health Group. That's the insurance company. It is underwritten approval based on your overall health and your health history. They do not necessarily pull your medical records, only if they have some questions on the application. As I said before, largest national PPO network, Cigna. Zero deductible, zero copay. That's where you get your tremendous savings. Okay, remember on these Obamacare plans or most other plans, if you're ill or if you're injured, the first $5,000, $6,000, $7,000 is coming out of your pocket before the insurance company is going to kick in their part. And as I said, typically annual savings between $3,000 or $4,000. A little bit more if it's a family, a little bit less if it's just an individual. ACA plan, Obamacare. Okay, so in Florida, you don't have a PPO. You have only the other networks, which are all geographically restricted, and you have to get a referral from a primary care physician. The premiums, of course, are much higher than on the U.S. Health Group plans. It's guaranteed issue, though. There's no underwriting for those. So for those who do have serious pre-existing conditions, you do have this option. You always have this option. It's just going to be a little bit more expensive, quite a bit more expensive, actually. And with the ACA plan, you have to watch out for that high maximum out of pocket. Okay, so for those who do have very serious, very high costs year over year, it's still better than what it used to be before Obamacare, because they weren't even able to get insurance. So now at least that person would be able to get insurance. Yes, it would be costly, but after $7,350, then you're fine. You're covered by the insurance company. Okay. So we also help with dental, vision, critical illness, short-term disability. So let's go over that real quick. So as far as the dental plan, this is with a Cigna dental PPO. Okay, so Cigna once again, excellent dental plan there. You get your free cleanings every 6 months. You have your cleanings, your exam, of course, even a deep scaling, what they call the periodontal prophylaxis cleaning, and your annual x-rays. That's 100% covered every 6 months. Then you have your basic care, 80% covered. That's your simple tooth extractions, your oral surgery with anesthesia, so if you need your wisdom teeth taken out or something like that, and also cavities or fillings for cavities. Okay. Now those who are young don't have cavities. If you notice that the new generation, dental hygiene has improved so much that we notice that it's very, very rare that the younger generation have cavities. But also old people, those who had cavities in the 70s or had cavities filled in the 70s and the early 80s, they used silver or mercury. And now it is composite. And after about 35 or 40 years, your dentist will tell you it's time to change because they're going to be cracking and they're going to be falling out. So you have to change them. And they charge $300 a piece. So I had 2 of mine replaced about 6 months ago. And with 80% off, instead of $600, it was only $120. I was very happy. And then your major care, that's 70% covered. Root canal, crowns, dentures, bridges, caps, things like that. So yes, I've also had a couple of crowns and a couple of root canals. All right, if anybody has had one before, you know it's about $1,200 a piece, right? It's okay. So 70% off. That $1,200 becomes only $360. So not bad for a dental plan. The vision plan even makes more sense for all those with glasses or contact lenses. It's $10 a month. So at $120 a year, you get a comprehensive eye exam. It's already worth about $120. And you get up to $120 on your frames or contact lenses. You get the choice one per year. So now you're getting your $120 back again. And you get the lenses for your frames for free, just a $10 copay. So now you're getting $300-$400. Sometimes it depends on the type of lenses you have. Sometimes up to $500 of service for only $120. So anybody with glasses or contact lenses, it's a no-brainer.
Does it cover any kind of lenses, like the one to change color?
They have not the tinting, because that's a little bit extra, but they have the standard progressive, the premium progressive, the bifocal, lined, unlined, and stuff like that. But if you want the UV protection, I think it's like an extra 40 or something. I have to go check.
Okay.
Yeah. And you also have a discount on LASIK surgery, if anybody needs LASIK.
How big is this discount?
I'd have to take a look. I think it's about 20 or 25%. I'm not sure. We'll have to take a look at that. All right. So the vision is really a no-brainer for anybody who wears contacts or eyeglasses. It's already being paid for, and there's no waiting period on the vision. Okay. We're going to get into the health in just a moment, or the medical part. Medicare, that's critical illness lump sum benefits. Okay, kind of like AFLAC, if you ever heard of AFLAC. Okay, but it's better coverage for less money. So you can get up to $99,000 worth of critical illness payment, which means if you have a life-threatening cancer, a stroke, a heart attack, kidney failure, something like that, paralysis, etc., they're going to send that lump sum benefit payment to you. Okay, and then short-term disability. So God forbid you have an accident on the job. Usually in the office setting you don't, but out in the field, sometimes you never know. You're walking around houses, outside, inside houses, and apartments, and I don't know if you do commercial offices or whatever, but there certainly is a propensity for accidents. If it's on the job, then you can have there are short-term disability plans as well. Okay. Before I get into this, I do want to talk a little bit about the medical. Okay. So it's very simple. The plan, once again, it uses a Cigna national PPO network. We find that 97% of all doctors, clinics, and hospitals take Cigna all around the United States. So you don't have to worry about changing your doctor. So the coverage you have, of course, you have your doctor's visits, you have your prescriptions, your x-rays, your labs, your ER, your hospital room board, ICU room. I mean, basically it's everything that you're ever going to need medically. Okay? You also have the complete, your wellness, your annual checkup, and those visits. Now, anything that's wellness involved does have a 30-day waiting period. And the reason why is because you have the choice of when you want to get your annual wellness visits, right? If you sign up on a plan right now and you decide to get your wellness visits next week, and then you decide to stop the plan, well, that's not really fair for the insurance company, right? So now you don't have a choice of when you have an accident unless you do it on purpose, and you don't have a choice of when you're ill. So only the wellness is a 30-day waiting period. Everything else is immediate. Okay? And then of course the major medical type portion of that as well, which is going to help you, which is going to provide full coverage for anything that is major medical, such as the heart attack issues or the cancers, kidney failure, stroke, aneurysm, things like that. Major accident with internal injuries. So it's 100% covered all the way to the end of the end of the year. Even if it's $5 million, there is no limit to it. Okay, so that's good to know. It is a full major medical type coverage. Okay, then you also have MD Live. It's a teledoc service. So it's an 800 number. You speak with a live doctor on the phone or by video chat, and they can even prescribe medication for you. So that's a fantastic service. So what that means is, let's say you have a sinus infection, a flu, a fever, something like that, and you know from your experience, because most of us get that once a year or so, or twice a year. Most of us, and we know from our experience, you need either an antibiotic, like amoxicillin, or a Z-Pack. But you can't just go to the pharmacy and pick it up. You need to have a prescription. So therefore, gosh, okay, I have to go see the doctor. I know exactly what I need, but I still have to go see the doctor. With this service here, they can prescribe it already on the phone, and they can call it into whatever pharmacy you like. So you don't have to take time off from work. That's a pretty good thing, right? And spend half the morning in the doctor's office. All you have to do is call from your car, from here, from your bed at 3 o'clock in the morning. It is 24/7. Okay? And they can prescribe medication, call it to a pharmacy. You can go pick it up, and then you're good to go the next day, and you don't have to miss work. Isn't that great? Okay. So I have a son who he's 19 now, so he's in college. But when he was in high school, because we have this plan, I knew there was a certain evening, and I knew he was studying for a big English exam. And at around 11:30 at night, he's like, "Dad, I'm not going to be able to make it to school tomorrow. I'm feeling bad. I'm feeling sick. Da 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 da. Can you call into school tomorrow morning as an excuse absence because I'm feeling sick?" And I knew, of course, he had this big exam. I said, "No problem." So I called up MD Live, spoke with the doctor, handed the phone over because they do have to speak with the patient, even if it's underage. Okay. And I said, "Here, tell this guy here how you feel." I didn't tell him what I was doing. They prescribed me amoxicillin. I said I had it sent over to a 24-hour Walgreens. I drove, picked it up. By the time I got back at 12:30 or whatever, I said, "Here, take this. Go to sleep. You're going to school. You're going to take your exam." Okay, so those who have kids who are trying to get out of it, this is a great service. But it's just very, very convenient that you don't have to take time out of your busy day to spend half the morning in the doctor's office for something that you know you need. That all you need is a prescription. Same thing for, if you need a cream for a rash, or things for high blood pressure, for refills, for hypothyroidism, for things that are basic. Now the major thing, they're not going to prescribe narcotics, or an opioid, and anything that's very major, they're going to say that it's best that you see a doctor. Okay, that even though you're on the phone with a doctor, it's best that you physically go to a doctor's office if it's something that's pretty major. Okay, so this is for the minor stuff that you need prescriptions. All right. And basically that's it. So these plans for someone like Angelica, who's about 25, 26, 30, okay? Single, married, kids, okay? Is wife about your age, more or less?
Yeah.
Okay, so the two of you, if you're relatively healthy, will probably run about $350 a month. On Obamacare, it would be about $800.
What about individual?
So for individual, for a 30-year-old male, it would be about $175 or so, $180, something like that.
And that's just for health, right? What about
that's the health. So then the dental is $40 per month, okay?
Mm-hmm.
And then the vision is $10 per month. All right. Now these are full vision and full dental insurances, and that's important to know. So some people might think, well, I can get a dental discount plan for $20 to $25. That's only a discount plan. You get between 20 and 40% off of the different procedures. But when you can get 100, 80, and 70% off, especially if you have something major going on, that's a big deal.
Absolutely.
Okay. Any other questions?
In order to sign up and talk to you, we call one of the agents.
You would want to talk to me. So for those who are over here, it's 813-777-2506. All of you have my stuff up there, my paraphernalia over there, and I put some on the table as well. But 813-777-2506. Here's another great thing. I also, my company offers a $100 referral bonus. So if you have any friends, family members, people you know who are paying way too much for their health insurance, or don't have health insurance because they think it's too expensive, or perhaps somebody who's on a spouse's company plan, okay? So some of you may be on a spouse's company plan and think, hey, I'm already covered. But guess what? Your premium is coming out of their paycheck. You're still paying for it, right? Because the company or the organization will most likely cover only the employee. Okay, by law they have to cover at least 50%, and some of them they cover more. But it's very rare nowadays that they're going to cover the spouses and the dependents. So people say, "Oh, I'm already covered. I'm good. I'm on my wife's plan or my husband's plan." Oh, yeah, you're on the plan, but you're still paying for it. It's coming out of their salary. All right.
I was paying like $180 something, almost $190 just for me, for the company I worked for before.
With the company plan, because their plan probably costs $400 or a month.
And when I asked for the Cobra plan after the fact, it was like $537 just for one person, just for me.
There you go. That's what their cost is. That's what their cost is. So it's craziness. Okay, because they're doing these Obamacare plans. Now with US Health Group, we can help people. We can help groups and businesses up to 49 employees. From 50 and above, by law, those companies or organizations must have an Obamacare plan, an ACA plan. For the time being, things are changing all the time. This administration is little by little destroying Obamacare. I'm not going to get into politics, okay? But as they destroy Obamacare, that's actually good for us.
But you see interstate insurance coming off?
Yes, well, there already is for association plans. Okay, so we also offer association plans as well. And interstate as far as you purchasing from an agent or an agency that's in a different state. Now, if your agent is licensed in that state, if it's the opposite, like I'm licensed in 30 states. So if anybody knows somebody in Georgia or in Utah or in Illinois or whatever, I'm able to help them out.
I said that with the thought of if you're allowed to reach outside your own state, then the competition would be a lot better.
Once that gets going, then yes. Yeah. So they're talking about it, and we'll see what happens. We have to see. But it's not only the administration that has to decide, Congress has to go to the law. Okay, and that's been tough because they tried to get rid of Obamacare last year, right? You guys have followed the news. And there wasn't enough support in Congress. And we'll see what happens now with the midterms coming up, if something's going to happen. But it won't take effect. Even last year, it was not going to take effect until 2020. So if something were to get voted in with the new Congress in 2019, it wouldn't take effect until 2022. So in the meantime, you have to take care of yourselves and try to see the best situation you can get. Okay. If you do have any referrals, whether it's in the state of Florida or any other state, okay, the best way, okay, just like with your industry, and rather than somebody giving your name and number to somebody else and waiting for them to call you up, right? You know what happens, right? They take the information, they set it aside, and then life gets in the way, right? All of us have that pile of paperwork next to our computer at home that we mean to get to and we never do, right? Everybody does. That's what happens, okay? So the best way, whether it's for real estate or health insurance or whatever, is say, hey, I have a guy named Steve, he's going to give you a call in the next day or two. Then you shoot me a text with their name and number, and I'll call them up and I'll do it. And for everyone that becomes a policy, that's a $100 referral fee for you, okay? So I would suggest, I suppose you guys probably already know this, that in the real estate industry, you do the same thing. If somebody has a referral, you say, hey, I'm going to have my guy Jocko or Jack give me a call, or give you a call in the next day or two, because this is your business, so you will do it, just like that's what I would do. Okay, and that would help not only your friend, but the person they're referring to or whatever, and everybody. So, you had a question?
Yeah, can you give an update on the association plans as far as like the Realtor Association or the Builder Association giving out health insurance plans to their members?
Okay, so this is something that I was slated to present before the board of Greater Tampa Realtors. Do they still call it GTR, by the way?
Yeah, so I've heard GTR, GTR.
GTR, okay. Because I before this, as you know, I was in a real estate based company, and so I was a big sponsor up there. So anyway, with the association plans, which we also offer, they have, some of them are linked to health plans, so we actually have one that's linked to this health plan, which is fantastic. Many of them are not quite yet. The companies are getting on the bandwagon now that they've been approved by the administration. We've had these already for about 3 years, but they were linked with the medical plan. So basically what you have on other association plans is you'll have an accident indemnity. Usually that's about $5,000. So if you have an accident, you have up to $5,000 that's going to be covered. You might have a teledoc service like this as well, but you wouldn't necessarily have a doctor's visit that you can do. You would have an indemnity for accidental death and dismemberment, if God forbid there's a situation like that. You would have an indemnity for what's called hospital room and board. It's not medical coverage, but it's for each day that you're in the hospital. You would have some type of indemnity check that would be sent to your home. If you're in the hospital for 4 days, you might get a check for $2,000 or $3,000, something like that. And the association plans that we have actually are attached to the medical plan as well. So it's the whole thing together. And most of the association plans that we see that are starting to come up right now are not attached to health plans because those insurance companies have to develop it. That's probably going to take 6 months to a year for that to occur. As far as I know, US Health Group is the only company that already has association plans that have been in the works already for several years that are already attached to a medical plan. Does that answer your question? Yeah, all right, but they have been approved. It's just that the companies are creating them, they're trying to ramp up, So some of them have already developed them, they come out in the market, but they're very inexpensive, but they don't provide very much coverage. It's certainly not a health plan. It's basically it's like getting Aflac, in a sense. Yeah.
So that's that commercial.
Yes. Yes. which is not, obviously if you have something major going on, you need to have something a little bit more, active than that. Anything else? Anybody over there? Would we be able to hear them if they did?
Let's see if we got
Are they able to call in
The right messages.
or chat?
All right.
Very good. So everybody has my number, everybody has my name, and any questions, any referrals, please reach out, and I will do the same for you guys as far as real estate.
Thank you very much.
Thank you.
Appreciate it.